Fascinating to me that someone like Mr. Carney was so quick to cut the carbon tax. And almost the minute he did it, he is very lucky. At the same time, we happen to have a big drop in global oil prices. So we're going to see the headline inflation number for April take a big drop, like around 1.5% or so. It says nothing about what happened, in the 2 or 3 years before that. We are not going to reverse that big increase that we had in prices. So the Bank of Canada has a very good measure on housing affordability. And at its worst in 22 and early 23, it got up to as bad as we saw in the early 90s and the early 80s, and those were terrible times.
Welcome to the Tom Storey Show with Steve Karrasch and Tom Storey, where we discuss everything real estate or whatever else is on our minds.
Welcome back to the Tom Storey Show. This week's guest is Doug Porter. Doug is the chief economist at BMO Financial Group. He is a repeat guest on this show, and dare I say, Doug, maybe friend of the show at this point. You've now been back twice. Thank you for doing this. I know how busy your job is at this moment in time, so carving out an hour for us, we really appreciate it. How are you?
Oh, I have been busy. I have to tell you, though, I often get asked that question, how are you dealing with this wildness? I'd actually say it's a bigger deal for my staff than
Right.
me. I mean, I'm used to, meeting clients all day long, giving presentations, but pretty much everybody in my team has to now do client meetings and presentations because there's so much demand in this crazy environment. But yeah, I've been pretty busy this year.
Well, let's start off with the biggest question right off the bat. Are the Toronto Maple Leafs going to win the Stanley Cup this year?
Oh, 100%. No, I mean we're off to a good start, but we Leaf fans have been here before, and we're going to take it one game at a time, not just one series at a time.
I'll tell the viewers as well. We're recording this Thursday afternoon before Game 3 is taking place, and this comes out after the next two games have been played. So anything can change at any moment in time. All right, let's get right into it. With election is coming up, the day after this episode comes out, people are going to go out to the polls if they have not already. Steve, sorry.
So, yeah, I want to point out that I asked Doug to come on here a while ago, and he said, no, this is the week I want to do it because I think we're going to have an election and there might be fun stuff to talk about. And you predicted that one perfectly correct. I don't know about, I hear modeling in banking doesn't always work out necessarily, but your political modeling was bang on, Doug. So I appreciate it. You coming on just in time.
Thanks for pointing that out. Always nice to get a forecast right.
All right. I mean, let's get to political talk. There is very likely going to be one of two prime ministers coming up. The prime minister that we currently have in Mark Carney or Pierre Poilievre taking over the reins. Looking at the outcome of whichever direction it goes, I'd like to know for us and our listeners, whether it is liberal or whether it ends up being conservative, do you think it has any real impact on the Canadian economy? What's going to happen? Maybe start with one party and then go to the next.
Well, and of course, it depends whether it's a majority government
Right.
or not. I think I'll tell you what the financial markets would prefer. They would prefer a majority government either way.
Okay.
I don't think we want the uncertainty of a minority government, and who does it depend on for support. I think that's actually been one of the issues of the last 6 years. Not to be too political, so I think first and foremost, I do think financial markets want a majority, and I realistically, I think they could live with either one of the two major parties. There's been a lot of talk recently, and now that we have their official platforms, there's been a lot of talk about the similarities. I actually think there is quite a bit of difference. Both platforms have been criticized pretty heavily by the likes of people like me because they're not that realistic. But I think this is a classic case where we should take what they're telling us seriously, but not literally. In other words, I wouldn't put too much stock in the precise deficit numbers they're aiming at, and even some of the cost of their programs. I think what's more important is the priorities between the two parties, and there is a fair bit of difference. I think definitely the Conservatives are more concerned about containing the deficit, and they also have more of a bias, I would say, to reduce taxes and reduce regulation, whereas I think the Liberals are much more focused on spending on defense and infrastructure and providing support for the economy, and they're not so concerned about the deficit. I actually suspect that whoever's in power, there wouldn't be that big of a difference on the deficit. It probably would be bigger under a Liberal Party. They certainly seem more willing to spend to support the economy. what I can't tell you is what the right answer is, because we don't know where the trade war is ultimately going. So it's not obvious to me what is the more appropriate policy. What I would recommend to both governments is stay nimble and don't get locked into these, big 4-year plans that you think, you're going to be dealing with X on the trading environment when we actually end up with, Y squared, 2 months from now. So I think that at the very least, they have to be really nimble. And again, I think from a financial market standpoint, while there is a difference, and as I said, the deficit probably would be larger under the Liberals. I think the financial markets would be fine with either, and they'll wait to see the first official budget. Whether these proposals are actually what we end up getting in terms of actual policy.
It seems based on the conversations that me and Steve have had with not only our parents, but people in our age demographic, and Steve's a little bit older than I am, if you can't tell, Doug. But the big thing seems to be that most people, and I'm not painting a brush for everybody here, but they're more concerned with their vote on who's going to be the best at dealing with Trump versus maybe who's going to be the best at actually, figuring out the budget and all the other things going on. It seems like most Canadians are really, at least on the Liberal side of things, and we're not going to go one direction or the other direction in this podcast, but they're really saying like, we're the ones that can calm this down. Carney can deal with him. And they're saying Poilievre's just like him. And whether that's true or not is anyone's different opinion. Do you feel like most voters, at least that you've been talking to, are making their vote based on who's going to deal with the trade war best, because that's the big issue now, or the long-term health of Canada?
Yeah, I would say more the former from what I've seen. And by the way, when I talk about these things, I try to be as neutral as
Yep.
possible. Hopefully, no
Mhm.
bias shows through here. But it is remarkable how the trade war completely changed the landscape politically. If you look at the Economist magazine of all places, had this great chart on sussed out from 338 what the odds were of which party was going to
Right.
win the most seats. Like, it is just such a dramatic change in the last 3 months, a complete mirror image. And I do put most of it down to who the populace thought had a better ability to handle the trade war. The one thing I would say, someone on the CBC Ad Issue panel made this astute observation. So the closest election I can think of this, and it's not perfect, was the 1988 free trade vote. And this probably predates any of your memories. Seems like ancient history, but basically it was a one-issue campaign, and it was
Mhm.
about whether we should have a free trade agreement with the U.S. or not. That's all we talked about. That's all people cared about. That's what people were voting on. And as soon as the election was over, we agreed to the free trade agreement, and then nobody talked about it anymore.
Yeah.
Then suddenly we were in all these different crises within the next couple of years that had nothing to do with the free trade agreement. It's like things we never talked about during that 88 election that were simmering away and really were important. And that's one thing I worry about during this campaign is there's been so much darn focus on the trade war that we're, overlooking lots of other and, just skating by lots of other pretty important issues that are out there. And I guess that's the one thing that's kind of made me wring my hands. Yes, the trade war is very important. Look, I'm an
Mhm.
economist. Of course, the trade war is important, but I'd also like us to talk about a lot of other really important issues as well.
You
I
actually got
think
to my next question before I even asked it. Trade war is all we're talking about. As an economist, what are the other issues that Canadians should be focused on, regardless of who wins this election?
So, and I'm of course, as an economist, I'm going to talk about
Yep.
economic issues here mostly. So, one question I actually get from clients sometimes is, well, if we weren't talking about the trade war, what would we be talking about? And we
Hmm.
would probably be talking about Canada's, really weak productivity performance in recent years. The incredible population growth we had for a few years, which has gone in the other direction now, and the housing market. And in some ways, all these things are interrelated. But those were really the big topics in well, I would say through 2024, and they're still there. They are being discussed somewhat, but I would say that those are some of the bigger issues. I actually just got off the phone with another media outlet who wanted to know, well, in the platforms, what is there here for productivity? Like,
Mhm.
what is there here to really strengthen Canada's productivity performances as we look ahead? And we're so consumed with the trade war, understandably, that I can't really point to that much that's going to strengthen productivity in years ahead.
Yeah, I
Steve, you want
almost
to jump in?
feel like, yeah, it's, I mean, everybody for, let's call it a month. Remember Silicon Valley Bank? That was like the biggest, right? Like it was going to end the world. This was it. It was all happening all over again. Lehman Brothers, here we come. And then, oh yeah, was that a blip? Like nobody remembers that. I feel like obviously this is a grander scale right now, the trade war. But my thought is there's not going to be a ton of onboarding of really menial jobs, let's call them. Like there's not going to be a lot of seamstresses starting up in the States, for instance, right? Those are going to stay in Vietnam and in China and other places. So I think like overall, there's going to be some deals made, let's call it. And I don't think we're going to be even remembering this in 6 months from now. So you, Doug, kind of alluded to at the beginning, maybe you're critical of both parties' platforms and what they plan to do. What do you see as flaws maybe in their economic policy here moving forward? And I think kind of what you alluded to, I don't think either of them are great. So they're probably 65 or 70% aligned, and then they're trying to divide that 30%, right? So what should we expect here? Are massive deficits coming our way, and how's that going to affect us over the next bit?
I guess it depends how you define massive. I think larger deficits are headed our way. So if you look at let's start with the Liberals, and I'm going to try to be an equal opportunity criticizer here. If we start with the Liberals, they're basically calling for something close to a $60 billion deficit this year and next. You know, when Freeland resigned last December, hidden on that day was the fact that Canada run a $60 billion deficit in that year, and a number of people were going, "What? It was supposed to be a $40 billion deficit. Like, how did that happen? That's enormous." And now that's basically what the Liberals are budgeting. And frankly, their assumptions are relatively optimistic. I mean, they've based it on the economy churning, and these are the parliamentary budget officers' assumptions. Economy growing close to normal over the next couple of years, and they've also penciled in some, I would almost call them phantom spending cuts that I doubt they'll be able to do. So I wouldn't at all be surprised if we're talking about budget deficits under the Liberals of 75, $80 billion. Is that massive? It's I think it's unfortunate that we're in this situation, but there is a lot of pressure on the government to spend more on defense, to support the economy through the trade war. And whoever's prime minister was handed a bit of a bad hand. They've got to deal with the finances of what was there before. They can't turn it on a dime. So yeah, I think under the Liberals, we are looking at a fairly large deficit. The Conservatives, the issue with their projections is, they've based it on really optimistic economic assumptions. They've sort of built in all these big revenue gains of some of the measures that they're going to undertake that they think is going to give the economy a bit of a kickstart, and then they're going to get more government revenues from that. Well, a number of folks have said that's not how we do things here. Like, you don't count your chickens before they're hatched. They might be right, but it's pretty optimistic. It's pretty aggressive. I guess the other issue I would somewhat take with the Conservatives is, there is a time to worry about budget deficits. I'm not sure this is the exact time I would be placing that as my number one concern. So they've actually got the budget deficit coming down this year. They're aiming for about a $30 billion deficit. That still sounds like a big number, but that's a lot lower than what we're likely headed for. So that means that they'd actually be restraining things this year in a pretty tough environment. I'm not sure this is exactly the point in time I'd be picking to restrain things. So I've got a bit of an issue with both. I think the Liberals are way too optimistic in terms of where they think they'll find some modest spending restraint, and I think they're interjecting themselves a bit too much in the economy, including in the housing sector. Whereas I think the Conservatives are sort of picking the wrong time to be trying to slash spending.
For let's call it, for lack of a better term, the average Canadian watching or listening to this, that over the past few years, yes, housing prices have come down from the peak, but where interest rates are at today, the actual cost of ownership isn't that much different, and everything around them has gone up in price. Yes, inflation's down, but it didn't go away, right? Like it's still there and it's still happening. Is there hope for Canadians that are trying to get by, that are maybe to get, and it doesn't even have to be property focused, but just anything in life, like trying to save a little bit more money, feel like things are a little bit better for them regardless of outcome here on either side of who could potentially win this?
Well, it's fascinating to me, and I'll start on the latter before we get to housing, more broadly. It's fascinating to me that someone like Mr. Carney was so quick to cut the carbon tax now, at least the consumer carbon tax. And almost the minute he did it, he is very lucky. At the same time, we happen to have a big drop in global oil prices. So, on the first day, much of the country got about a 15, 17 cent drop in pump prices. And then, within a couple of days, we got another 10-cent drop because global oil prices dropped. So in my neighborhood, we went from, one day gasoline prices, I know they're a lot higher in BC. We went from $1.58 to suddenly they were $1.26. And, within days of Mr. Carney becoming prime minister, that's actually really helpful. And, we're going to see the headline inflation number for April take a big drop. Like it's when it comes out later in May, we're going to see it like around 1.5% or so for a couple months.
Hey agents, a clean and easy to manage real estate website is a must. Go to realtyninja.com/Tom right now and start your site totally for free and pay nothing until you launch. And then when it is your time to go live, you will save 20% off of your entire first year just for signing up at realtyninja.com/Tom.
Now, I would just stress that, and I think, as you say, the average Canadian, they get really frustrated when economists talk about, well, inflation's only 1.5% to 2%. They always think you're crazy. Prices have gone up, 20, 25%. So just as a, Econ 101, when they talk about, the inflation rate, that's just the rise in the last 12 months. It says nothing about what happened, in the 2 or 3 years before that. We are not going to reverse that big increase that we had in prices during and shortly after COVID. Like we basically had a big step up in prices, and now they're growing a bit more modestly again, but they're still growing. And I don't think we're going to go into reverse. Like some prices, we have like gasoline. And some food prices have come back a bit, but food prices overall are still rising. And I think, we're probably looking at in the next year or two, inflation still rising by 2 to 3%. So are we going to reverse all those big gains? No. But the rate of increase is basically back to something more tolerable. And really that's what the Bank of Canada tries to achieve. They don't, when they make a mistake on inflation like we had, they don't try to right that wrong. They just get the growth rate back down. Now, let's spend just a minute talking about housing, since we're talking about affordability. So the Bank of Canada, speaking of the Bank of Canada, has a very good measure on housing affordability. And basically what they try to do is recreate a typical mortgage payment plus utility charges, and then they take it as a share of income. And at its worst in 22 and early 23, it got up to as bad as we saw in the early 90s and the early 80s, and those were terrible times for affordability. Like if you don't know, in the early 80s, interest rates got up to almost 20% at one point. Now, they didn't last long there, and even in the early 1990s, they got up as high as 14% at one point. Both of those horrendous episodes of affordability were corrected by home prices crashing. We do not want to get affordability back to comfortable levels that way. But what we have seen in the last year is affordability has improved because overall nationally prices have stayed about stable, interest rates have come down, and incomes have grown a bit. And those are the three things you need to get affordability back. We're still in an unaffordable situation. It's still bad. Not as bad as it was a year ago, but definitely I wouldn't say things are affordable by any means. We're moving in the right direction. What would ideally happen over the next year would be interest rates would come down a bit further, incomes would grow a bit more, and home prices would continue to drift sideways or so. That's a pretty good world, I think, for getting affordability slowly but surely back into some kind of reasonable neighborhood. Based on our projections, so we're still not back to affordability levels, say in 2019, like before COVID, because rates aren't quite as low as they were in 2019, and we still had that big run up in home prices. So it's still not that comfortable in our view.
Steve reminds me all the time that now that rates are at 4%, he's like, these are really good rates. Like, did we also just forget maybe that 4% is not a terrible rate because we had twos for maybe too long a period of time? And, I don't think any economist, including yourself, would come out anywhere and say that rates are going back to 2% anytime soon, unless things got not great. And so it wouldn't be a good thing if rates went down that far. But with all the potential spending, regardless of government here, is there a chance that rates could go up a little bit further if inflation pushes up because government spending is higher than, even if the deficit is higher, could that not mean that rates could go up in the future?
So yeah, let's get into the rate forecast. And some economists have been, and even some central bankers have been concerned about the possible inflationary effects of the trade war. I see it differently. So the big concern about a trade war is, think about it. We're basically increasing the price of what we import, and the U.S. is doing it in spades. They're doing it with everybody. For instance, they've got a ridiculous 145% tariff on China. Once you get above about 50%, you're not talking about a tariff anymore. You're talking about basically blocking trade. It's like, we don't want to import anything from you. Like, these are just such ridiculous levels. But what they do is they both tend to raise prices and reduce growth because we can't sell as much to our trading partners. So that's not a good place to be for an economy. Both higher prices and lower activity. I think what happens though in that world is the weakness in growth, the struggle that the economy is having will tend to dampen inflation over time. So you get a bit of a short-term bump in some prices of things you import, but what happens is people can't really afford it. They can't afford to do it. They can't afford to buy things if they've gone up, 10 or 20% in price, and so they just stop buying or they wait, they delay. For instance, autos are a great example. The U.S. is trying to put a 25% tariff on any auto they bring in. Well, what do you think is going to happen to auto sales in the U.S.? There's going to be like this Hunger Games rush to get autos that are actually produced in the U.S., but they can't produce enough. They just can't, to meet all their demand. And then any car that isn't made in the U.S. is going to face like a 25% tariff. And there's just a lot of folks who are just going to go, well, I can't buy a car this year. I can't buy an F-150 this year if I got to pay 25% on top. And so activity is going to get crushed, I think, is if the trade war keeps going like it's going. And eventually I think that'll keep a lid on inflation. It might even push it the other way. And I talked a little bit about oil prices before. Well, one of the reasons why global oil prices fell so much is because the markets are worried that the outlook for global growth is really weakening as a result of this trade war. And we're seeing a few commodity prices drop in the last couple of weeks, things like copper prices and lumber prices, because the markets think that this is not good for growth. And so circling back to your question on interest rates, I don't think that in this environment rates are going higher.
Okay.
I think if anything, ultimately, what the central banks are going to have to do is cut a bit more. They're not going to rush into it because they have to make sure that inflation doesn't pick up as a result of the trade war. So they won't be doing it quickly. Of course, in the Bank of Canada's latest rate decision, they actually didn't move rates. That's the first time they haven't cut in almost a year, because they just want to make sure that there isn't this secondary effect on inflation from a trade war. But I think what we'll see over the next year is slowly but surely we'll get pretty clear evidence that what's happening is growth is softening, and that's keeping a lid on inflation, and ultimately the central banks cut rates. Are they going back to 2 for, say, a mortgage rate? I don't think so. We see some trims in interest rates from here, but not a heavy duty slash.
Is a mid 3 fixed rate something that you think could be realistic in the next 12 months from where we're at today?
It could be. So our official call on the Bank of Canada short-term rate, which is of course what drives the variable rates, is we think it drops by another 3 times by 75 basis points. So right now it's at 2 3/4, peaked at 5%. That's where we were a year ago as we speak. It's already come down by more than 2 points. We see it coming down another 75 basis points to 2%. Not a huge move. Now, of course, what drives the longer term fixed rates is more bond yields, longer term bond yields. We do see them coming down a wee bit, but not a full 75 basis points from here.
And that 75 basis points on the overnight rate, that's by the end of 2025?
Yes.
Okay, gotcha. You had written in one of your recent publications called Viewpoint, and I'm just quoting you here, that central banks can't do much to fix the damage of a trade war. So I think we're all kind of looking at our neighbors and going like, what is going through their mind right here? What is the end goal? And maybe you could fill me in on what you think the end goal is here. But Bank of Canada can't really do anything, can they, at this point? Like, they're kind of handcuffed?
Yeah, and actually, this is a point that even the head of the Federal Reserve, Jay Powell, made the other week, that really got Mr. Trump upset, was that there is this fundamental tension that central banks will face. Both the risk of, in the short term, higher prices, that we're paying on imported goods because of tariffs, and at the same time weaker growth. Now, normally, if you get weaker growth, they cut rates, but like I said, we're in this unfortunate situation where there's a bit of short-term upward pressure on prices, and Powell made that point, and it really, angered the president, to the point at one point he was threatening to fire him. He's since rescinded that.
Can he fire him?
That's a really good debate. It seems like the answer is no, but like apparently the only way he can get rid of the Fed chair is because of cause, which is like theft or malfeasance or something like that, not because he disagrees with his policy. But what I would point out is Powell's term is up a year from now, like, and Trump will be able to appoint the next Fed chair. So I would say just be patient, because you're going to have a lot of influence on policy if you just wait without really upsetting the financial markets. I think the world would not be amused, the financial world, if the president of the United States fired a Federal Reserve chair because they weren't cutting rates fast enough. Like that would really be disruptive for financial markets. What you would see happen is, maybe they could get short-term rates down a bit if he put in his person instead of Powell, but nobody would be buying their bonds, and so long-term rates would go up a lot. So you'd have a really steep yield curve, as we say in the trade. You can artificially keep short-term rates low, but that's not going to help with your long-term rates at all.
And does the governor of the Bank of Canada, are they appointed by the Prime Minister, or is it a different system here?
They are basically appointed by cabinet. They have 7-year terms. The Fed chairs have 4-year terms. Macklem was actually appointed early in the pandemic, back in the spring of 2020. So his term runs until spring of 2027. In my lifetime, there actually was one Bank of Canada governor who ran 2 terms. This is going way back to the 70s and 80s, Gerald Bowie. But ever since then, they've all been one-termers, and I would be shocked if Mr. Macklem was appointed for another term. So we will have our own new Bank of Canada governor in 2027.
Hey folks, if you're looking for a real estate agent in the city of Toronto, let's face it, you gotta call my buddy Tom Storey of the Storey team and Royal LePage Signature in Toronto, Ontario. They're your obvious choice because Tom is not just the co-host of this podcast. No, he is a real life and top producing real estate agent in the city of Toronto. There's nobody out there that knows the condo market better than Tom and his team in downtown, but they do service the entire city of Toronto and any of your residential real estate needs. So if you're looking for an agent, do not hesitate to reach out to Tom, book a call with him using the link down below in the description of this podcast, and let Tom guide you through your real estate journey. And now back to the podcast.
Yeah, and you've got Poilievre here kind of saying the same sort of thing. He'd fire him if he can or can't, who knows. But he's got that rhetoric going back and forth here as well. And then my concern is also like, what is the level of connection? People think that the Bank of Canada and the Fed, in theory, are supposed to be independent. And then you've got the president and the possible prime minister threatening to fire these guys. And then you also now you have a former governor of the Bank of Canada at the top of government as well. Like, is this way more politicized, the Bank of Canada right now, than it ever should have been? Shouldn't the Bank of Canada be kind of page 2 and 3 and 4 of the paper where they make some decisions and monetary policy just moves on? What is the connection there right now?
Yeah, and one of the reasons, and let's spend a minute talking about why it's important for central banks to be independent, because you don't want interest rates being set to support the parties in power, and time it for elections. of course, every politician wants rates to be as low as possible, but there are some times when you actually do need to raise interest rates, and sometimes that's a tough decision, and politically, it's sometimes not popular. And but sometimes you have to make that hard decision outside of the politicians, and unfortunately, inflation doesn't necessarily obey whatever the political cycle is. And what a lot of research has shown is economies that have independent central banks are much more successful over time. Look, they might not always make the right decision, but they're going to be making that decision not based on the political calendar and trying to do the right thing. Has the Bank of Canada become too political? Look, Carney and Macklem know each other really well. Macklem was actually Carney's deputy governor for a while. That doesn't mean, and not to name drop here or anything. I actually know Mr. Macklem. We went to school together, in fact, in university. I can assure you, he is not setting interest rates on the political calendar. He is doing what he really believes is the appropriate thing to do for the calendar, for the economy, I should say. By the way, Mr. Poilievre has not talked about firing Macklem for quite a few years. He only talked about that back when inflation had roared up to 8%, and a lot of economists were clutching their pearls and going, "Oh my gosh, firing the Bank of Canada governor." I actually thought at the time, what, he actually has a bit of a point. Like, if in fairness, if the Bank of Canada made a really big mistake, and what's their one job? Controlling inflation. If they didn't get inflation right, well, maybe you had a point. Maybe the government should be allowed to remove the Bank of Canada governor if they really thought he or she was not doing a good job. But the reality is, of course, I think above all other central banks, the Bank of Canada got it earlier than others, and they were one of the first to really start raising interest rates pretty aggressively in 2022. And look at where we are today. Inflation is 2.3%. So yeah, they made a pretty bad mistake, like many did in 2021. But I think they did a pretty good job of getting us back on the track without really skewering the economy. And like I said, Mr. Poilievre hasn't talked about firing Mr. Macklem anymore. And I think the politics have been toned down a lot at the Bank of Canada.
Now, they're supposed to be, again, independent, but I was reading Mark Carney's book, and at one point he actually mentioned calling, I think it was Flaherty at the time, finance minister, and asking permission for a rate cut. Now, I'm assuming, was that because it was an emergency rate cut back in 2008? Because he actually quotes it in the book. He says, I phoned him and said, hey, this is what we want to do. And he gave his blessing. So I didn't know if that was maybe they're not allowed to make an announcement outside of the regular dates, possibly.
So I'm going to have to reread that section.
Okay.
I doubt he was asking permission. It was probably more giving him a heads up to know that the interest rate was coming. You can make a case that maybe doing quantitative easing, which the bank didn't do until the pandemic, until 2020. A lot of other central banks did it back in the financial crisis. They didn't do it till 2020. I think you can make a case that that's one area where the central bank probably should confer with the government to let them know what they're doing. But on rates, no, I don't think that's a good idea at all to ask permission of governments. Like that really would raise some questions over their independence if they're actually having to seek permission.
Yeah, I was
Doug,
surprised.
Steve just learned to read,
portion.
so I don't know if that's correct. So,
seriously, I'm going to reread that section.
Yeah. Let's take this back to real estate just for a second. I promise we'll find our way back to politics. It will happen here. But Doug, we're now sitting in a market pretty much across Canada. My understanding is, unless you're trying to buy a house in Winnipeg, which is weirdly the hottest market in Canada right now, it's pretty calm. You have things to choose from. Interest rates are a lot lower than they were previously. It's the type of market that buyers were almost begging for in 2021 and 2022. But national sales volume, local for me and Steve's market, is at like 25-year lows. It's crazy. And now I get it. Trade wars, everything happening. There's the uncertainty. Does the election coming to its conclusion here in Canada create more certainty for Canadian buyers, or is this all just a trade war needs to be figured out before people make decisions?
And it's hard to know. Definitely, just the political uncertainty we've had in Canada has not helped. almost from day one. As soon as we got back, of course, Mr. Trudeau announces his resignation on that first Monday back, and it's just been, uncertain since. So really, we've gone, almost 4 months of a big cloud over the Canadian political landscape here. My best guess is that it's been about 80-20. So about 80% of the uncertainty is the trade war, and then 20% is Canadian politics weighing on the buyer's mind. That's just my off the top of the head guess. I think it will help to some extent. The fact that things have quieted down a little bit on the Canada-U.S. trade front. It's not quiet, but it's we've got a little bit of certainty. It's not great. The result is not great, but we've got a bit of certainty there. I think you're going to slowly but surely see the market thaw in the months ahead. I talked about how the trade war had completely upended the political landscape. Well, it sure upended the recovery in the housing market too. It was fascinating to me how things were slowly but surely getting back to normal. So we were seeing a nice pickup in sales through the second half of last year. We keep this running tally on what the 10-year average on sales is, and we were basically back to, if not even above that 10-year average by December. And then it's like somebody turned the lights out as soon as the trade war landed, and now we're back in the doldrums again. Like I said, it's hard to know the exact balance, but I would blame 80% of that on the trade war.
That's fair.
I think we're in a little bit of a interesting spot too, because I on my YouTube channel, Doug, what I did is I took from my area 6 months of average sales before every of the last, I think, 9 elections that I was able to vote in, and then the 2 months afterwards. And all us realtors were like, it's going to get better right after the election. It's going to get better. And then almost every single time, except for under, I think it was Trudeau, sales volume dropped. And I was even more shocked to find out it dropped often after a spring election. I thought it was like, well, spring election, no big deal. Mark's going to take off after. The fall elections actually did better. So I don't know if that's just people recalibrating after the craziness kind of sets in. The only thing I didn't run was to find out how it changed, whether or not it was a majority or a minority government, which I think would also affect things greatly. But I'm just not convinced it's going to come roaring back in the short term.
Oh, I'm with you, and I don't even think we have to look too much to historical precedent. Although that's a very interesting study. I hadn't thought of doing that particular one myself. That actually is a very interesting piece of information. But yeah, I said the market's going to thaw, but I'm not looking for things to come roaring back at all. I mean, our official call is something close to flat on sales. Yeah. We had been much more optimistic 6 months ago, and we still think the interest rate environment is going to be relatively friendly. No one's talking about the mortgage cliff anymore, by the way. We downgraded it to a speed bump last year, and now hardly anybody's even talking about that. But we do have this cloud of uncertainty on the trade front. Until that lightens up a little bit, it's going to be pretty tough to see the market. And then, we haven't really talked too much about population growth. Of course, we don't really have that big layer of support either behind the market. So, I think it was Tom who said that, this is almost an ideal market for, this is what people were begging for a few years ago, first-time buyers, like they can actually take their time and there's lots of choice, and rates are a little bit more reasonable, but of course the level of prices is still pretty high, and you got sellers who remember those prices from a couple of years ago and aren't really giving in. So the market's in a bit of a stalemate right now.
Yeah, I mean, I can tell you, Doug. I was telling Steve just before you came on here, for like a ground level experience. I'm a real estate agent in Toronto. I have 20 properties listed for sale right now, and I'm prepping 5 more. Normally, I don't have any more than 5 to 10 on market at the same time because of the absorption of the property selling. And I know Steve's in a very, very similar position, and everyone I've talked to is bringing more homes out. So at some point here, I agree, the thawing is not going to be prices going up. It's going to be sales volume maybe getting a little bit better, but I guess it's anybody's best guess. My question next is the potential polling, and there's maybe 4 or 5 companies I see in the news reports for the Canadian election. And as we know now, heading into the American election, we were pretty much told, like, this is 50-50. It could go any way. And then it did not end up that way. And me and Steve kind of joked about this, is like, if someone calls me during the day to ask my question, like, I don't have time to take a call from a polling company. I'm like, I'm doing my job. Maybe just people that aren't working are taking those calls, and maybe that's wrong or right. That's just our opinion. But long-winded question. Do we trust the polls, the polling companies here in Canada for the election? Is there any experience we have from the past that we can look at and say, have they been right or wrong before? Long-winded, I know.
The pollsters have done a fairly good job in Canada in the last couple elections. It's not ideal. And this one is a little bit different, because I do think a lot of people aren't quite as certain of their vote, because, we've got a couple new leaders. And we had such a dramatic, quick shift to the Liberals. I think a lot of that's strategic voting. And there's a sense that the Conservative voters are pretty committed. The Liberal voters might be a little less committed. And there's two possibilities here. One is that, the people who actually get out and vote, it slightly favors the Conservatives. They do better than what the pollsters are suggesting. That's one possibility. The other is that, as I said, we got a lot of people who are pretty clearly strategically voting, like, former NDP, even BQ voters, who've gone to the Liberals to try to block out the Conservatives this time. And if they get the sense that Liberals got this in the bag, I can go back to my usual way of voting, or I don't need to vote. That is a possibility. So there's a couple different ways that it's possible that they're somewhat underestimating the Conservative support or somewhat overestimating the Liberal support. But I would say that overall the pollsters have been pretty accurate in Canada. Ahead of the U.S. election, I was telling audiences for months ahead of it. I said, look, pollsters have blown it 2 elections in a row. They've completely underestimated Trump. What's to say they're not going to underestimate him again? But the pollsters kept saying, we know that, we've corrected for that. We got it right this time, and of course they blew it again. So who knows? I don't think it's a done deal. Let's put it this way. I'm not assuming anything at this point.
Yeah.
The polls are certainly heavily leaning to the Liberals winning, and probably a majority, but we'll see.
Steve's been sending me pictures. There's like a place to vote just beside you. He can see from his house, and the pre-vote. I mean, Steve, you can tell the story. I've never seen lines that long.
Yeah, so I can see a voting station from my house, Doug, the one we go to every single time. And normally it goes like, we look outside, there's 1 or 2 people there, and it's like, okay, honey, when do you want to go over and cast our vote? Because we can walk over. This time, we waited for the shortest line that we could see, which was probably about 50 people outside. This is outside of the gymnasium where it's being held. And so we went and stood in line. Thankfully, we did, because the line just got longer and longer and longer. So I was like, from the point where we were, I counted how many people were in front of me. And it took us about 45 to 50 minutes to vote from there. So I went, okay, if that happened, and it was open for 12 hours, 4 days in a row. And then I did the calculation times 4 lines. And I was like, I think they got 6,000 people through that one little polling station in 4 days. The crazy part was they didn't have more polling stations there. Like, there was just 4 people working there. But I think 4 people or 4 desks processed that many people. I've never seen people line up to vote like that before. And to me, that usually would lead towards people are getting out early because they want change. So they're motivated to get out. And we saw that here in the BC election provincially, and we saw a party that came from nothing to almost taking power.
Yep.
I'm just interested to see if it's actually a double time. It's all the Trump fear people and all the people coming out that want change, and they're probably going to lock horns somewhere in the middle. So it's going to be very, very interesting to see. I can't believe that we might see the largest popular vote by a Conservative government ever, and they still may end up not even not only not forming government, but the Liberals, because of the riding system, may end up with a majority government as well, which is crazy to me. Like, I've never seen such a exciting election. Maybe it's just because I'm well into my 40s now, and this is just what dudes in their 40s start to geek out about. But it was very interesting to watch the lineups this last week.
Well, I was one of the 7.5 million people who voted early myself. Might as well get it done. I'd made up my mind, and yeah, it was a huge number. So the one factoid on the Liberals and the Conservatives is combined, they're looking at getting more than 80% of the vote, which we haven't seen since even before my lifetime. The
Wow.
last time that happened was in 1958 in a Diefenbaker landslide that the Liberals and the Conservatives got over 80% of the vote. Um, you know, a local person, Ford's campaign manager has been slamming the Conservatives campaign, but the reality is their vote tally is held pretty solid, and Poilievre's going to get a higher share than many of his predecessors ever did. The story here has been just the left to center vote coalescing behind the Liberals and
Yeah,
basically
right.
abandoning the NDP. That's really been the story.
If you need insurance, you need to go where I go, squareone.ca. At squareone.ca, you can get a quote done in just a matter of minutes. If you're a tenant, landlord, or a homeowner and you need a policy, go to squareone.ca, or better yet, go to squareone.ca/The Tom Storey Show and save $20. That's squareone.ca/The Tom Storey Show for your discount on home insurance right now.
Yeah, the NDP is going to be obliterated here in BC, from what I can tell. Maybe off of Parliament altogether. Like they could end up. I saw one projection said they end up with 5 to 6 seats in Parliament, which to me is absolutely mind blowing. I don't know how we could get there, but it's going to be an eventful. I'm going to be waiting there Monday night. Like I've got a jiu-jitsu class to go to, and then I'm coming home and I'm making popcorn, and we're going to see kind of how this plays out, because I honestly can't believe that it's come from what it was in November.
Yeah.
Like, talk about forecasting wrong. If Jagmeet pushed an election in October, he's opposition lead, right? And now he may not, he's for sure going to lose his own seat, but he may even get his party to extinction, which is absolutely nuts to me. Absolutely crazy.
We'll have to see when the votes are all counted. You never know. There are some, again, not to get too political here. I mean, we've just spent half an hour talking about politics, but which is not part of my job, by the way. And I should stress that these opinions are all my own. They are not
Right.
my employers. I should have said that at the outset. But I will say there's probably some pretty popular MPs in the NDP who, they might actually do better in their own riding, so they might be able to hold on to more seats than what the polls might indicate.
Yeah, and I've been bugging Tom a little bit. I said, an Ontario Conservative is a federal Liberal, right? Just like a Alberta NDP is a federal Conservative, right? It's really crazy how those parties can sway so much from one side to the other. But I don't know.
Last comment I'll make on it is it is fascinating how, in say even, I would say a middle of the road province like Ontario, 1 month you can get a Conservative majority, and the polls are suggesting, the federally the Liberals will win a good share of those seats right back again. I mean, it's it is interesting.
It's all happened so quickly. Now, when we look at the at who's getting out there and voting, the millennials are bigger than the boomers. And the reason that I bring that up is because over the last, I guess you could say 3 years, but really the last year, there's been a lot of things done for potential first-time homebuyers to try to help them enter the market. I think the one that happened in early 22 was like the tax credit that doubled from 5 to 10,000. But then you've got obviously the extended amortizations for first-time homebuyers, the CMHC mortgage cap. You've got the first home savings account they put into place. You've got the limit from your RSP going from 30 to 60,000. You add these all up, it's like the government knows, and whether there's doing these things to get the votes or not, but the last 4 of them happened in the last year when they knew an election was coming. It seems like they're really trying to talk to those first-time home buyers, saying to them that we believe in home ownership and we want to help you get into the housing market. I can tell you in my own business, not a whole lot of people are calling me saying like, this new plan has made the difference for me and now I can afford it. But I mean, the first home savings account, I think, is the best thing the government's done for first-time home buyers in a long, long time. I actually think it's great. I wish the limit was higher. But I guess my question here is, first-time home buyers or potential buyers are also a massive I guess in terms of like who's voting right now. The people that don't own real estate are going to make a big difference in this election.
Potentially, and
Yeah.
it did look like that was going to be a big election issue until
Right.
until the trade war arrived. I I guess the one thing I always struggle with is a lot of the measures you talk about, and they're well-meaning, and like you said, the first time the savings plan is a good idea, but a lot of them really all they do is and this is something I've been saying for years. They just support demand
Yep.
that
Mhm.
raises
Yep.
prices, and it essentially cancels itself out.
Yeah.
Um,
Right.
Realistically, we have to. Well, first and foremost, we've long said this is we do have to better align population growth with the ability to create new homes. And that's not zero. I mean, we are building almost 250,000 homes per year. If you think on average, it's about 2 people per dwelling. In some cases, a lot more than that. That means we can accommodate population growth of about 500,000, give or take, without putting a lot of stress
Hmm.
on the housing market. But we had an increase in the population of 3 million people in 3 years. I'm not blaming anybody or pointing fingers, but that of course is going to really harm affordability when you've got such a great number of people who need to be sheltered, who need a home, one way or another, and an economy that's only able to add about 250,000 units per year. Of course, you're going to
Right.
get a really tough affordability situation. So that's job one of bringing that into better alignment. And then, yeah, sure, you can bring out some of these measures that help first-time home buyers. I'm always a little bit skeptical of whether they're targeting that exactly right at people who are real first-time home buyers or not.
Got it.
But be that as it may, I think a lot of that's really tinkering around the edges. You have to get the fundamentals of the demand and supply side right before you start worrying about these little tinkering measures, which I think a lot is in a lot of cases it's just the government trying to show whoever's in government trying to show that they're doing what they can to support affordability, and it really doesn't move the dial.
The last time, sorry, Steve, the last time we had you on the show, we had asked you about rental prices long term, and you had basically said something along the lines of, "I'm very worried about this." Um, I know that rental prices, at least in the more expensive markets, seem to have been going down recently, at least the asking prices. And maybe this is a short term that things will dip down a little bit from the highs that they are, but it seems like at least the purpose-built rentals are now coming back in the bigger cities faster than we've ever seen before. Has your outlook changed at all on rental prices into the future here for Canadians?
So I'm gonna have to check my notes when we last talked, but probably the other thing, yeah, and actually the purpose-built rent building has actually been a lot firmer than I would have guessed. But the other big change is we had a very dramatic shift in Ottawa on the immigration front,
Yeah.
Mhm.
like which I did not think they were capable of doing, frankly, because they had just been so open. In 2023 alone, the population grew by 1.3 million people, and they realized they overdid it. And now they're aiming at almost zero population growth the next 2 years as a short-term fix to the excess of the last couple of years, and that really I think is the number one reason why rents finally topped out. And we're seeing in Toronto, we're seeing it to some extent in Vancouver, some other major cities. We are seeing rents coming down. They're still really high, but there has been relief. And you can just look at the rental component in the CPI. It's not a perfect measure by any means. A lot of folks have issues with that, but it peaked a while ago, and it's moderating pretty notably now.
So
So
they're
I'm
talking
much
about
more optimistic.
units. We got to temper down demand. We seem to be only increasing demand for some reason, and we're of course building less and less and less units. I mean, there's going to be a good amount of condos in urban areas come to the market over the next year still, but we're not building enough. We're going to continue to not build enough, and then we've got, for instance, right now the Fed saying that things like modular housing is the way to go. On the city levels, particularly here in BC, everything's all this multiplex stuff. We're going to knock down one house and make four. What is this solution going forward to make these new homes? Like, are we thinking that we're all going to live in a certain type of home, or is urban sprawl going to be the answer? Like, how do we even go this and take the next step? Because I don't think anything's going to be built given our economic climate over the next little bit. There's not going to be, in 3-4 years from now, there's going to be zero built. And I think all of these solutions that are coming from every level of government are just, honestly, they're fairy tales. I don't think anybody wants to live in the stuff they're proposing they build.
It depends on the city. It depends on the market. I share your concern over the condo market. We actually are expecting new housing starts to weaken a bit further, and they actually peaked back in 2021, and they've been they're still at pretty healthy levels. Like, they're still running at about 240,000 a year is the neighborhood we're in. That's actually stronger than it was, say, 15-20 years ago. But in recent years, we peaked in 2021 at around 270,000 new starts, and it's been coming off since then. So, we've heard all this nonsense about, oh, we need 3 million units by year X or whatever. And, we were the first ones to say that is just delusional. We're not going to be able to do that. And, I don't want to be a complete naysayer. If we put all our resources behind it, sure, we could build more houses, but we're going to have to train up a lot of skilled labor in a big hurry. We're going to have to get the land available. We're going to have to service that land. It does sound like Mr. Carney's really serious about cranking up housing one way or t'other. I would just say that might be enough to offset weakness we're going to see in the fundamental market, but we're still actually expecting starts to moderate over the next couple of years. I don't think they're going to zero. I'm not that pessimistic. I think they'll probably be in the low to mid 200,000 range still, but I think there'll actually be fewer starts in the next couple of years than there were in the past couple of years.
And are what they're going to build, is it the type of housing that people actually want to live in, or is the type of housing that they can build the fastest to say that they built? That's a question that, we'll find out, right?
They were counting nursing home beds as housing at one point, and it's like, okay, we can kind of fudge that number, I guess. I got one last question for you. So, Doug, we're going to elect you Prime Minister on Monday, and you have a magic wand. What's the best way to write this whole GDP per capita, no productivity stuff in Canada? Which way should Canada be looking? Is pipelines the solution? Should we be looking at manufacturing? Are we going to rely on building new homes as supplying all of our industry over the next little bit? Which way do we take it?
If we're just talking about improving productivity, I think we really do have to make just the investing climate a lot more positive. And actually, I was just asked today by a client, like, in this tough environment, like, what makes you excited? What makes you happy or upbeat? And I said, well, one way or another, we're going to get a different government on Monday, and they will be different from the past government, even if it's got the same color. It will be somewhat different, and I think more friendly towards business in general, more welcoming of capital, and a little bit more focused on growth and less on redistribution, hopefully. That's what we end up with. I think that's really the first step I think we have to take is, not just take it for granted that wealth is always going to be there, that growth is always going to be there, to actually nurture that growth. And that probably does mean, making some targeted tax reductions, even if it does mean a somewhat wider deficit for the short term. But I think, unfortunately, whoever is elected, they've got to deal with this trade war like that. That's really out of our hands, frankly. And I don't envy the new prime minister, because that's what we've got to deal with first and foremost, and then get back to like I said, making Canada a more favorable place for investment.
Tell you what, whoever wins the election, I want to be a fly on the wall or tap into that first phone call with President Trump and just see how the conversation goes, because I guess it's anybody's best guess. Doug, thank you so much for spending time with us today. As always, we really, really appreciate it. I know our audience really loved the first time you came on. All the comments were amazing, and I know it's going to be the same this time. And thank you thank you for coming on. And any last words of wisdom you want to share?
We're going to make him tell us who he voted for right before. No, I'm just kidding.
Not a chance. All I will say is time flew. I can't believe we're almost at an hour. I appreciate being on, and go Leafs, go Jets, go everybody.
Go all Canadian teams except for Montreal and Ottawa.
These conversations are great when we talk less and our guest talks more. So we really appreciate all your insights. Awesome.
Thank you.
Thank you so much for listening. Thank you for watching, and we'll talk to you all soon. Bye. Just one sec, Doug.